Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analyzing the three major US indices, that being the S&P500, followed by the Nasdaq100 and the Dow Jones30 futures chart. Just before I start today's video though, anyone who's interested in joining my Signal service, then please do not hesitate to visit my website, dailymarketmovements.com. The website link is in the description of today's video. So all you have to do is scroll down and click on that link, which will take you to my website. Once on my website, if you scroll down and click subscribe here under the monthly subscription area, that will then give you access to my Telegram group chat where I also post research prior to the US market opening. But let's get started with today's video. I want to start by saying a massive congratulations to everyone in my Signal team because we had a trade in Palo Alto. Palo Alto, a cyber security company. I was a buyer after their earnings report last week at 270. We had a stop loss at 230 and a take profit at 300. So if we just quickly show you what that trade did for us, stop loss was down at 230 as I mentioned, and the take profit was all the way at $300 a share, and that gave us 11% profit on that trade. So a massive congratulations to everyone in my Signal team. 11.11% won there. It really was a fantastic trade. But let's get started with the video today. S&P 500 currently trading at 5,075. We continue to trade within this ascending wedge. I've said it time and time over the past couple of videos that we are running out of space here within this ascending wedge, and 90% of the time when this pattern forms, we do see a break towards the downside. What does that mean? Does it mean that we crash 10%? No, not necessarily. I think that's when you revert to the fib chart. If we go off the October lows to the highs, you could potentially be looking at a correction down towards 4,872. In terms of percentage points, how far is that? That's roughly a 4% correction. I think that would be really healthy. From a seasonal perspective, in a election year when the prior year has seen more than a 10% gain, you do tend to see some weakness from mid-February all the way through to mid-March. So I think in terms of seasonality, I think a correction, a little 4% correction could potentially be on the cards in the coming days and weeks ahead. And then finally, just moving over to the Nasdaq100, again, very similar to the S&P 500, we continue to find ourselves trading within this ascending wedge. A break below then could potentially target a move down towards the 0.236 fib area. And then finally, last but not least, the Dow Jones30 currently trading at 39,088. We're trading at an all-time high here for the Dow Jones30, but I do believe that we are due a pullback very similar to the S&P 500 and the Nasdaq100. We are in this minor uptrend here, and once this line's broken, and I think we could potentially go and test the 37,800 area where the 50-day EMA currently finds itself trading. Other charts that I'm looking at is the US dollar. We are seeing the US dollar fall today, hence probably why we are seeing the markets rally. And then finally, just moving over to the 10-year bond yield, haven't really done much. We are minus 0.5 basis points, but again, this has got the potential to fall significantly lower over the coming days and weeks ahead, especially if we do see lower inflation. I think that's key here. If we continue to see a downtrend in inflation, then we could potentially see this chart collapse, and as well as the dollar, see the dollar trade significantly lower, and that could potentially be a booster for the US equity market. But that being said, I still do believe that we are due to see some sort of a correction or digestion phase before we do see another uptake in this rally. That's going to wrap it up for today's video. Don't forget, if you'd like to join my Signal team, then make sure you join by visiting my website, dailymarketmovements.com. Don't forget, the website link is in the description of today's video. Thank you very much, and I will see you all tomorrow.